JB here. Hope everyone's doing outstanding. Tuesday, November 1st, 319. Talk really quick about the market. Some names I'm looking at go from there. S&P down over 1%, NASDAQ down over 1.75%, Dow's down a little less than that. No news, no catalysts. You take a look at headlines. I think Market Watch has risk. Let's see what exactly it says. Um, Amid risk off mood, right? We do have earnings after close. So AMD reports kind of the headliner there. SMCI reports. Trying to think of some of the other names reporting earnings. Arista Networks, Mara, Upstart, Kava, Pinterest. So decent amount of names. But I think the other headline, I wouldn't even say the headline, but it's a continuation here today is the crypto, right? And Bitcoin's down. I said it this morning, 15% for the month. It's obviously more than that right now. Ethereum's down 10% today. And back, 3, 4, 5 years ago was like the market kind of led, and then crypto was kind of like the follow through, right? So Bitcoin will be down. I mean, back then would be 15, 20% or some crazy swings, but typically it would happen after the market was already down. Now it's almost like, I don't know if I was saying it's more, it's like a proxy for the market. You can see risk, or the risk on, risk off appetite, quote unquote, based on what crypto's doing over the weekend, as opposed to having to worry about the stock futures. So funny how that all works. Ironically enough, it says risk off mood. And gold is down, right? It's up, down, just hit lows here of the session, down 1.75%. So we'll see where things go. This is all on the heels of the Michael Burry's big short disclosure of 5 million put options on Palantir and a million put options on Nvidia. Who knows where he got them, the cost basis, the timing. Who knows if he's still in, maybe adding more. It just a large, just number one, it fills the gap of any kind of major news story, right? Especially with the market showing some weakness, like, oh, here we go. Um, and then it kind of adds fuel to that bubble fire. And people have been it's been going on for a while now, right? And I'm not, I hate to call things or say, we're in a bubble or create the, do the fear, uncertainty, doubt thing, the fudding. It's just a, fear monger. I think that's the worst kind of thing to do because, the market always has sell offs. It happens over time. It's trying to call it is usually a fruitless endeavor. I mean, when you do hit it right and nail it, obviously it can be very profitable because sometimes the downturns happen very quickly, and if you're positioned right, 3, 4, 5 weeks of gains can get erased in one day, and then one trade can make up for trying to chase it over that time frame. So anyway, I keep saying I'm just going to be trying my best to be positioned when if we continue to pull. If we do, at the same token, I remain cautiously optimistic, but I do think there's opportunity today. So, all right, just that's kind of overall market sentiment. You take a look at a SPY. I drew my first trend line for quite some time at 679. Today's high we got all the way to 690, 679.96, so almost 680. So 679 has been that key spot. Then on the way down, overnight we got down to 673. So that's kind of the spot I said I'll be a little more aggressive getting some puts. We'll see if we get there with 675.24. Other things to note too, yields are actually lower here today. So that's a good thing. But then the US dollar, it's strengthening. So interesting stuff. Oh, Chewy's running. Let me just pop that up on the oh, well, it's up $2 there. Nice. Relative strength. All right, so that's kind of the overall market. Let's see here. Do I have it? So now just quick on some individual names. First I'll just bring up the gold trade, and uh, pretty much the same thing trying to call a top in the market. Same thing with me in regards to gold. Like I've said it for however many years I've been doing these rants since over 10 years. I'm just not a gold bug. That's just not in my DNA or whatever you want to call it. So when I look at gold, I always think I'm more skewed to the downside. And that would be painful if I continue to do that week after week by trading puts or longer dated strikes. So how I've been trading is a little shorter dated, a couple months out or a couple weeks out, and try and take advantage of pulls. And if we get further bigger pulls, that's great. If not, just trying to keep things small and what have you. Which, I mean, options obviously allow you to have low risk, high reward. So take a look today. I think today's like a really good example of the possibility that 3,800 might be coming sooner rather than later because markets are selling off. Here's an environment where you think, okay, gold has already sold off quite a bit over the last couple of weeks since mid-October. Here's an opportunity for the bulls to come in and really, at least buy the dip, right? We're down $400 in the last 3 weeks. And not only did we not buy the dip, it's like here we are in the afternoon and no bounce to be heard of. So I was trying, and I was looking to get some December strikes on dust, but maybe towards the end of the day, I locked the rest of my 13s in on dust for some nice gains. I still have the 14s, and then GLL. So I still have the November and December strikes. I probably, in lieu of trying to add some more GLL calls, I'll just look to get further out December strikes on dust. Maybe the 16s, 17s. Don't be surprised if I add those after the close. Dust is not a name that you can really do technical analysis, TA on, right? The When you look at a chart and the Bollinger Bands, relative strength, and all that stuff, typically it doesn't jive on a 2 or 3 time ETF. So, with that being said, I'm going to say Dust is over its 50-day moving average for the first time since July, or actually before that, and every time it's coming up to that 50-day moving average, that was it. That was the end of the run. So that's good or bad, and we'll see if we get follow through tomorrow. But could be the start of a bigger move to the upside. And I was saying this last week. I think it was last week. The premiums are like insanely cheap on Dust, and that maybe that's the market's pricing it correctly, or maybe the market has zero probability that there's going to be some massive move to the upside in Dust. And I don't like to use previous prices to look to explain future prices, but I mean it was $20 back in August. Not saying that that's where it could go, but options certainly are not priced for that move in a matter of by the end of 2025. Let me say that. So don't be surprised to add some December strikes. So that's Dust. And then this morning, looking for some trades or at least individual names. Wingstop was one of my top 5 stocks. Maybe it was 2019, 2020. I think the stock was $80. Wing is a very easy name to get to think of a short case on, right? If you're a bear, I mean, to sell chicken wings, right? I mean, not much moat around that business, right? I mean, anybody can. Well, not anybody, right? You have to, but point being said, it's like it's a brand you don't think would have a moat. Very uh, I guess the business can be impacted by high chicken prices, and it's a franchise. Well, anyway, so Wingstop is a franchise, so it's tougher to look at numbers, fundamentals. So when folks look at it to short at it, you can't really do the same comparisons you would with other chains because the franchise model makes trying to get the valuations tough. And the same thing can be made for Domino's Pizza, right? Domino's, the franchise, they only own a very small amount of locations. Because of that, it's very hard to figure out fundamentals. But on the flip side, I've always loved Wing. I mean, stock's been on monster tear over the years. It was all the way up to I think $400, but now it's kind of like it's a victim of that whole sector as a whole. I mean, I remember a couple, I don't know, 2 or 3 quarters ago with McDonald's. Everybody looking at the McDonald's breakfast menu, pointing out that there's going to be a recession. I think that was back in April. But here we are again, and people talking about the consumer discretionary names, especially in the casual dining space, that are getting hit. Wingstop's one of those names that just got taken to the woodshed despite huge earnings. So back in August, it was 280, great earnings all the way up to 380, and then it's been downhill ever since, all the way under $200 just this week. And then they had earnings this morning. If you look at the earnings, they're not the best earnings, right? 5% sales comps, negative. So, but they cited demographic issues. I guess the immigration situation is causing some folks not to be around to spend money. I don't know if that's the best way for a company to cite slowing sales. But maybe there's some truth to that. I don't know. But that was some of the slowdown they said. But it's still like a great business, and they're doing stock buyback. They have a dividend, cash generating cow. So take a look at it. Worked off the lows this morning and just went on an epic rally. Was up 10%. I'm trying to look for some strikes. I'm like, oh, only monthly strikes and possible play on a risk reward basis. Then I start looking. I'm like, this might go to like 270, 280 in the next week or so. If that's the case, the 300s look interesting. So went and got those 300 spec calls. Then boom, it goes 340, 350. Lock some of those in for over 100%. And then it's been chopping around ever since. Then just earlier today, you have the Papa John's news, right? Apollo, one of those funds, is taking them private, but then it looks like they're pulling back on the offer because of the current environment for the consumer, which is pretty remarkable stuff that did change in their mind. But anyway, did not bode well for casual dining names. I guess I'm not sure if that explains some of the move from 250 all the way down under two to hit 235 at about 2 o'clock. But anyway, it's bouncing around here. I closed some more out, and I just hold a couple some time, right? So if the market does find a bid and for the next week or two, and some of these names, especially in the casual dining space, start to go. I don't know if some of these other names report earnings soon. McDonald's, I don't know I think it's this week. So I'll continue to hold those. Great story. Love Wingstop. I'm not going to load the boat for a huge bounce here. But even if you just look at the chart, the 50-day moving average right there at 265. Right. So that's swing. Then just later today. So markets finding some pressure. I talked about 673 as a spot. I'd add some more puts. I still have the Adobe puts. Uh, but then, we're starting to pull here on the NASDAQ. So NASDAQ is having more pressure than the S&P. Figured I don't want to be in a spot where we have another gap down tomorrow. And I start looking at some of the names that maybe I would get some puts on. Broadcom, the premiums are expensive. It's 350 and change all the way down past 325. Tough, right? Maybe it's been like a rock. So every time Broadcom finds some weakness, it bounces relatively quickly. So if I'm not fast, and scalping's not my forte, I'm going to lose money. So I want to try to find better risk rewards setups. And I was looking at Seagate. So Seagate had monster earnings last week. Same with Western Digital. That whole hardware, memory, storage sector has been on tear. SanDisk, which I don't know if SanDisk reports. I think they report tomorrow after the close. I was looking at those names. Again, tough to find decent risk reward strikes. And then I'm looking at the Lam Research and ASML. And then ASML, which I had puts, or at least an idea for puts maybe 2 or 3 weeks ago. And those the next day, gap down, they were up like a couple 100%. I'm like, this looks decent on a risk reward scenario. And the difference between last week, adding them this time and not doing them last time is because just perception, when you have a stock that's 1040 and you go and you look under $1,000, it looks like a far distance for the stock for the puts to pay. But then I'm just looking at, again, similar to the Wingstop. It's like I was looking at Wing, doesn't have to go to $300 to make money on the call side. Same with ASML. I just, maybe if it gets to 1020 tomorrow, 1010, 960s will pay. So I got some spec lottos, not a lot of those. I'll hold those as a hedge, as a hedge into tomorrow. And then, if there's continuation, I'll lock some in to cover costs. And heck, if there's follow through, I might be a little more aggressive there. At some point, this whole AI situation has a deeper, bigger pull, right? And maybe it's just short lived, maybe it's longer duration, maybe there's a complete reset altogether. But if we have one of these follow through days, and tomorrow could be it, I'm going to be a little more aggressive adding some, just because I don't want to miss it when it happens, right? It's going to be like the big party. And not only that, it'll help offset call positions. And thankfully I'm not loaded the boat on the call side either. All right, so that's ASML. That was the thought process there. Sorry, and then just quick on other names. So Adobe, I was actually looking at the 310s into next week. I still have 310s. That one's being stubborn, and some of it I think is because it's getting to like a point where the valuation, people look at it, it's like it's not a business it's not a bad business. It's just, I think, a business that's being impacted and supplanted from AI and competitors. So that's probably one of those names that's going to bleed for 1 and 2, 3 years. But it offers a decent hedge because I think it's going to bleed regardless if the market is weak or even if the market is strong. So I'll continue to look for opportunities on Adobe, but you take a look. It's kind of been stuck here, 327, big spot there. Do I have my chart? I think I have my chart there. Okay. And then just some other names. Oh, Duolingo. I keep looking for opportunities to play this one for upside. Relative strength. Market is weak, and Duolingo's in the green. I don't know if some of that is because of its fall from the 350s in the last couple weeks. Speaking of 350s, I don't know if I was on the rant talking about it, but the 350s for this week were 280 by 350 at the start of the day. And despite it being green, those premiums have evaporated. So right now they're 215 by 285. For me to trade this, I would have to get in and ride freebies. So watch, maybe you get a melt up, lock some in to cover costs and ride the rest. I'm not going to hold a lotto contract. Actually, they're $2 by 245 on a option expiring the same week that are over $2. Just that risk reward just doesn't jive with me. And not only that, here it could be one of those, it's had a huge move from highs, and we saw what happened with Lululemon, right? That one got just melted low, and kept earnings, 400, then 200, then 180, and you were waiting for the bounce, and which never came, right? And it was just like every earnings was like, okay, that's why it's selling off. Okay, that's why it's selling off. And hopefully that's not the case with Duolingo. The difference between Duolingo, it had a great quarter back in August. The stock was at 325, great earnings all the way up to 475, and then it was downhill ever since. So someone and I talked about this a couple weeks ago. Their chief technology officer, this lady's leaving the company. She's kind of the reason, I wouldn't say the sole reason, one of the reasons their growth was so rapid, because she was able to maximize their social media presence, right? It's create some viral videos. Who knows if that has any more impact, but I think maybe that's some of it. But again, I think it has an opportunity for upside, but trying to trade it, I'm not going to Who knows? Again, it could have a beat and raise and the stock could sell off. And we've seen that so far this week and last week too, with some of these companies reporting great earnings and they still didn't rally. All right, so that's Duolingo. Super Micro reports after the close. I was actually last week, I think it was at 54 bucks on Friday or 53. I was looking for calls. I'm like, this looks interesting into earnings just because similar to Dell, it has to continue to have all this pent up demand is there. And so they pre-released 2 weeks ago, rough numbers, but some of it was because they said they have to push back the revenue. So instead of it coming into the current quarter that they're reporting on, it's the next quarter and the quarter after. So it wasn't like it was because anything based on their sales, right? It just happened. So one side of me says get some lottos. The other side is like, wait and see. I mean, it's not a name that I haven't traded before. I don't think I've gotten calls on this one. But you start looking at 55 strikes, look interesting. 56 by 58. Anyway, all right. I think that's it, folks. Trying to think of some of the other names. Again, I'm not gonna sit here. We can. The funny thing is, tomorrow we can wake up and futures we can be up 1%, right? And we can be gapping down 1%. And the funny thing is that they would just create the headlines depending on what the market does, right? So that's the funny thing. I don't think there's nothing material. Tomorrow we get services PMI. I don't think that's going to move markets too much. So to me, it's more of just a function of, okay, are there going to be buyers here or the buyers done, right? If that's the case, then maybe there's more downside to come. Anyway, let's have a great day. I'll be back rock and roll.